Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is January 9th, 2025, and we're diving into Franklin Covey's first quarter fiscal 2025 earnings report. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Franklin Covey, a leader in organizational performance improvement, has just released their Q1 fiscal 2025 results. It's an interesting report with some key developments, especially in their education division and strategic initiatives.
Revenue and profitability overview. Let's start with the top line. Franklin Covey reported a consolidated revenue of $69.1 million for the first quarter, a slight increase from last year. However, their net income saw a significant drop. John, can you explain this?
Absolutely. While the revenue increased marginally by 1%, net income fell to $1.2 million from $4.9 million in the previous year. This decline is primarily due to increased operating expenses, including a $3.0 million rise in SG&A expenses and $1.4 million in restructuring costs. The adjusted EPS came in at 9 cents, missing the forecast of 22 cents by analysts.
That's quite a miss on the EPS. What were the main factors contributing to this?
The main factors were the strategic investments in restructuring their North America sales force and increased costs related to new personnel and promotional activities. These are expected to drive future growth but have impacted short-term profitability.
Division performance and strategic initiatives. John, let's delve into the performance of Franklin Covey's divisions. The education division seems to have performed well. What are the highlights here?
The education division saw an impressive 11% increase in revenue to $16.5 million, driven by new initiatives and increased sales of classroom and training materials. This growth is a positive sign of the division's potential.
And how about the enterprise division?
The enterprise division's revenue was slightly down at $51.6 million, mainly due to decreased international sales. However, the new North America sales structure is now in place, which is expected to accelerate growth in future periods. Subscription revenue also saw a modest increase to $55.8 million, indicating steady demand for their services.
Operational efficiencies and future outlook. Operational expenses have risen significantly. How is Franklin Covey managing these costs, and what does this mean for their future outlook?
The increase in operating expenses, particularly in SG&A and restructuring, is part of their strategic investment to realign their sales force and enhance their market presence. Despite these costs, their cash flow from operations remains strong at $14.1 million. The company has affirmed its guidance for fiscal 2025, expecting revenue between $295 million and $305 million, and adjusted EBITDA in the range of $40 million to $44 million.
That's reassuring. What are the key areas of focus for Franklin Covey moving forward?
They are focusing on increasing client penetration and acquiring new clients through a specialized sales team. These initiatives are expected to drive sustainable revenue growth and improve profitability in the long term.
Key takeaways. In summary, Franklin Covey's first quarter fiscal 2025 results show a mixed performance with strong growth in the education division, but challenges in profitability due to strategic investments. The company remains optimistic about its future prospects with affirmed guidance. John, any final thoughts?
Franklin Covey is in a transition phase, investing heavily in its sales structure to capture more market share. While this has impacted short-term earnings, the long-term outlook remains positive if these initiatives pay off as expected.
Thank you, John, for your insights. And thank you to our viewers for tuning in. Don't forget to like, share, and subscribe to Smart Stock Watch for more financial analyses. We'd love to hear your thoughts on Franklin Covey's performance in the comments below.